Hello everyone, my name is Nico Simko. I'm one of the co-founders and the CEO of Clair. Today is another episode of HR Tech Trailblazers. Today's a special episode because I will not be interviewing anyone, but I will be interviewed. I will be interviewed by Aditi Maliwal. Aditi is one of the board members of Clair. She's been with us since the beginning of the journey. Aditi is a SF-based partner at Upfront Ventures, and previously to Clair, she was a Series A investor in Chime. And with that, I will welcome you to welcome me, Aditi. So welcome to HR Tech Trailblazers.
Thank you for having me. I'm excited to be here, and I'm excited to have the opportunity to finally interview Nico, which is not something we often get to do. We do spend a lot of time talking to him about more serious topics, but this one's going to be fun, and we get to kind of dive into why Clair does things the way that they do. So I'm going to kick it off with, I think the world gets the sense, I think people understand how Clair works, and I think you chose a unique strategy to be to build out an embedded model. Tell me a little bit about why do that rather than taking a traditional marketplace approach. Just let's start there.
Absolutely. So before we go into, I would say, marketplace versus embedded, in the world of you want to pay employees as fast as possible, you need to be in a world where you know that the employee worked. Right. There are wage advance solutions that work outside of that, and they're going to take consumer credit risk. Typically, those players will have a super high product bar, meaning they're going to ask the consumer to be direct depositing with them for months and months and months, or they're going to have super high fees. Why? Because they don't know that the employee works, so they're going to take pretty risky credit risk decision on whether or not to advance funds. So if you're not going to do that, which Clair doesn't do, then you're tied to, okay, we need employment data. The way employment data works is it's somewhat owned by the consumer, but it's mostly owned by the employer. Consumer-owned data typically will only be there after the fact, after payroll is run. And so if you're trying to pay someone, 2 weeks, 10 days before they get paid, you kind of need direct access to the employer. And so before Clair was founded, around 2015, 2016, there were wage advance solutions that said, okay, we're going to go partner with the largest employers in the country. And our strategy is going to be the following one. We're going to tell very large employers that they're going to be able to attract workers, they're going to be able to retain workers, and they're going to be seen as a great employer by offering a work today, get paid today functionality. Now that worked. Those companies have scaled. Now the problem is about 80% of private sector companies in the United States employ 250 or less employees. That's a super important statistics. That means, again, 4 out of 5 employers in the country have 250 employees or less, and the or less is actually more dominant than anything. So we have a very strong U.S. economy that is based on smaller employers. And that's super important. Why? Because the typical small employer does not have a 6-person benefits HR team that can roll things out. The typical business is trying to get by, especially exactly like their employees, right? They're trying to get to the next month. They're trying to make their sales numbers. They're trying to control their costs. And so when the payroll system says, hey, look, we have all these functionalities on our marketplace, typically the sign-up rate is 0.5, 0.2, maybe 1% at best. And so the penetration is not there. And so what you've seen is the on-demand pay market has been really stagnant at these very large employers. Mm-hmm. And so growth rates of these companies have really slowed down to 10%, 20%, some 30%. But really, it's kind of saturating a little bit. And so the next frontier is saying, how do you go after, the smaller business sizes?
By the way, I do have a question. Do these employers see a lot of churn? And do they immediately, is the value of Clair seen almost immediately to some of these employers? Tell me a little bit about their dynamic with employee churn.
Absolutely. I think it's even before employee churn, it's employees showing up to work. What has happened, and
because these are hourly workers.
Correct. And so what's happening is you're, day 27th of the month, you're getting paid in 3-4 days. You're an employee. It's getting tight for the week. You're going to call in sick. You're going to say, sorry, I can't show up to my shifts. you're going to go and drive Uber for the day. Happens all the time, all the time. And then Uber pays you in real time. So then you can make $50, $100 to get by for the week because you've just driven all day. And then who loses? It's your employer, because suddenly now they have to cover for a shift. It's a mess. And so for them, that is what they're trying, like absenteeism is what they're trying to solve for. And then the other thing is that, let's put it this way, it's that employers often with Clair don't even know that it's there. They just hear it from employees that they use it. They see it as a benefit. And that's by design. We're not trying to put the employer at the heart of this. We're trying for the employer to be happy with the payroll and workforce management software that they signed up for. We want to be, almost inexistent for the employer. And that's by design.
Yeah, super interesting. Maybe one other question I had around that is, when you talk to employers, is it an immediate yes, or is it show me value?
It's a great question. The answer here is it's immediate. Oh, I didn't know this was live. Most employers, even employers with dozens of thousands of employees, because we also go up market, they typically realize after the fact that this was turned on, because
it's just seamlessly working.
So seamlessly working.
Yeah.
It's a similar thing. We were talking about it as a team. In New York, payroll companies have started partnering with City Bike, which is like these bikes that you can rent in the streets. And they just rolled it out to everyone, and they notified the managers, this thing's live. And suddenly, like, most employees signed up for it. There was a discount. And they started thanking their employers for like, wow, this is a great benefit. And the employers like, well, what are you talking about? Like, I didn't know this thing was live. And be like, well, you guys rolled it out. It's like, no, it's the payroll system. And I think this is a little bit where the future of technology at the workplace will go, is that it's going to be the consumer who's going to decide. They're going to be seeing all of these functionalities embedded. They're going to be able to sign up. And the employers will be like, look, it's at your choice at the end of the day. And some employers will turn off functionalities, but at the end of the day, it's going to be a consumer-driven decision.
Okay, great. That's helpful. So you were taking us through the journey of Clair from where you guys began, and moving on into sort of how you made the decision to become embedded.
Yes. So the decision to become embedded starts with a bet of two things. One is that payroll and workforce management systems will want to go on the journey of building this. And that has one principal component, which is that's core of their strategy, and it's a revenue generating opportunity. And then the other component is the consumer side, is that will employees trust the workforce or payroll system to sign up for financial services? That was not obvious when we started. And if anything, people were telling us, don't do it because it doesn't work.
Interestingly, though, we already know that the U.S. consumer has so much distrust in banks.
Yes.
And actually, I wonder, and I'm sure you guys have stats on this and understand this better, is individual employees probably are starting to have a greater trust, less in government institutions, banks, things of that sort, but their employer.
Yes.
Because if you think about institutions and where you feel the most trust, an employer makes sense that you would eventually feel some amount of trust with them if you don't trust a bank.
Correct. So that's exactly right. I think in the United States, you receive your paycheck directly from your employer. So there's a trust that, like, I'm going to work in a few days, you're going to pay me. Healthcare is predominantly distributed via employers. So it's like, if I go work here, I will get healthcare. So there is this trust element that is, I would say, a little bit subconscious at this point, that, if you work somewhere, you're gonna receive form of compensation, and faster pay is a form of compensation. And so that I think is the essence. And what we're trying to show is you don't need to put the employer as a barrier. You need to put the employer as in the I don't care bucket or I'm a champion bucket. And very, very few will say, I don't want that. It happens less than 1%. Usually it's like 0.1% of employers don't want it. But yeah, there are some.
You were talking about how employers or employees have to sort of build a relationship of trust with their employers. And that's kind of how you guys thought and how you started to make that bet into going into embedded pay.
Yes. So when we went into it and we had that bet that we made on, hey, payroll and workforce management systems are going to want to do this and consumers are going to go sign up, there's things that did not work out at the very beginning. There's at those two levels, right? is this going to work for our partners, and will consumers sign up? On the will consumers sign up, what we realized was, I would say, more transactional payroll and workforce management systems that didn't really invest in their UI. Those actually, in the workforce management side, still own 50% of the market. It's shrinking over time.
Interesting.
But when we started, it was closer to 70%. It's already gone from 70 to like 50%. Those were not a good place for people to sign up for financial services. One of my favorite stories is when we first launched with a time clock provider, and so imagine like you clock in, clock out, you scan your finger. We were so excited. There was a button there where when you clocked out, it said, "Hey Aditi, today you've earned $55. It's available. Just put your phone number. We'll send you a text message and you can sign up." And there was across hundreds of employers, there was only 3 people that clicked the button, and so I couldn't understand why people were not signing up. And then we went on site and we just looked at people who were clocking out of work. And what we realized is when you're clocking out of work, you want to go home. You don't want to hang out with your time clock.
Right.
Also, this time clock has been there for probably 10 years.
Right.
And sure, it works. And our partners were great, but it's not a platform to layer on financial services. And so what we did is we had to kind of remove all of these providers that anyways were kind of launching mobile apps, so they were going in the direction of more modern, but we had to discount that. And then the other thing that happened at the same time was we had a grand vision when we started to say we really feel like overall consumers need better financial services, and wage advances is just a component of that. And so why don't we upgrade them all into this better digital banking solution? And the users who signed up absolutely loved the product, use it every single day. But most people didn't want to upgrade their entire financial life to get a wage advance.
Totally.
And so that's when we decided we're going to decouple that. We're going to have several solutions, and we're going to focus on the one that's most needed, which is on-demand pay.
Tell me one more thing, which is when you guys shifted into the on-demand pay model, you started building it out. How did you know who the right partner was?
Yes.
How did you find the right partner to do this?
Yes.
I love hearing the origin story of this relationship. And it was a little bit, I'm going to say, it wasn't the easiest decision.
No. I think it was taking a big step back and transparently seeing what the market was pulling us towards. And it was less, I think when you start a company, you start with, it's basically like scientific research. You start with a hypothesis, right? And your hypothesis, especially when you start, is based on a lot of assumptions. But as you go and you work on that hypothesis, assumptions get proven or disproven. And so what we did is we just looked at the journey we had been on. We looked at what was proven and disproven. And then we said, okay, based on everything we know today, right? And let's forget about our initial hypothesis. How would we rebuild this the right way? And so we went on this journey for a few months, and we started talking to our partners at that level. And we said, here's what the data is saying. Here's what's working. Here's what's not. And some partners, I think, those who didn't have mobile apps that, were a little, I would say, less user experience centric, we realized our journeys were starting to separate. And we were comfortable with that because I think as a company, to be successful, you also need to know who your customer is. Like knowing
Super
who
interesting.
you don't go after is as important as knowing who you go after, because that way you can serve those people better.
Yeah.
And you can tell, I like to ask on this podcast, who are you not going after? And for us, who we're not going after, is people who are using more of a commodity-based product, who are just transactional, who are not trying to build employee and employee user experiences.
Yeah.
If you're not focused on that, we are not the right partner for you.
Yeah.
But anyways, going back. So we realized we needed people who really, really cared about employees, who had probably a team that was dedicated to it. And then what we needed was to rethink our own product architecture and say, we need to be a little less idealistic and a little bit more pragmatic about what consumers want. Transparently, I've been an hourly worker for 3 years during my college years, but it's been a few years now. And so I am not today my average worker. And I think you need to acknowledge that and say, I'm going to have ideas of what I think is good for them, but they are the ultimate decision maker. So if they say no at scale, I have to pivot. I can't override them because then I'm going to just die in a corner. And so the decision there was to say, we're going to decouple ourselves from mandating that people need to update their direct deposit in order to take wage advances. And we sat down with one partner. They had tried to also build on-demand pay. It was one of the most requested features on their platform. It still is. And we sat down with them and said, how do you want to rebuild it? And they, I think, built an incredibly loyal user base in both their employers and their employees. They've created a product all the way down to their, to their design that is like really, really compelling. And we felt like if we were going to use our infrastructure but rebuild our end product, we wanted to do it with a partner of that scale. And I think they realized that for them, it was not too hard of a bet because we're 250,000 people that already came into our platform. We were across thousands of businesses. So we're not like an early stage startup at this point, but we really saw this as product expansion with them. And so we went on that journey together, and that was Gusto. And now it's at the end of this year, it would have been 2 years since we started this journey with them.
I love hearing a little bit of the origin story, but one thing I did want to call out is, yes, you had to rebuild infrastructure, but you actually had a lot of infrastructure in place from your previous product. And you did also have a decent amount of, I would say, learnings, but maybe processes set up already. Maybe talk a little bit about kind of how much already existed and sort of that transition into becoming an embedded payroll, an embedded on-demand pay option. How difficult was it for you and the team internally? It's a great
question. I think that any company that transforms its end product, it does take a toll on the team because when you...
Which, state again, the end product was a consumer app.
Consumer app, correct.
Yes, which no longer is the case.
Exactly.
Yeah.
Yeah, to be very clear, what Clair's product for the first 2-3 years of the company was its own separate app that employees would need to download. They would need to get a physical card in the mail. It usually takes a week or two. They would have to update direct deposit. Also, it takes a week or two to then start using the product. We then removed all of that friction, said there is no separate app. You don't need a new card. You don't need to move your direct deposit. It will take you on average. The goal was to do it under 2 minutes. The average user takes 121 seconds now.
Crazy.
So we're already there.
We love talking in seconds.
I know. When we could, like, the team first presented to me in minutes, and I was like, we can put this in seconds at this point. And so that was the big change that we wanted to see.
How do you continue to think about adoption? How do you continue to think about your growth and Clair's growth when you don't have direct control necessarily?
Of course, it's a great question. We've spent a lot of time at the contractual and legal level to figure out how do we set up the partnership that we're going in this business together. Because that's the way we speak about it. That's the way we do business. So our contract also has to reflect this.
Yep.
And our view was we do revenue share, like a typical, I would say partner to a payroll company. But the way we do it is as a percentage of the revenue. And so percentage-based basically creates an incentive for creating more upside, for making sure that the experience is well built at the unit level. And what it does also is as we scale and as we get deeper and deeper into the user base, they know that once we want to create more product solutions, I'm a big believer that wage advances is a band-aid in financial services. You need to create ways for people to get better credit, overall, save more. If they need on-demand pay, they're in a tougher spot. So you can help them get out of it, but also thrive. And so the reason why the percentage of rev share is important in that context is that we can then show them that as the pie expands with us, they get a percentage of that. And so the journey is not transactional. It's not, let's put you in a marketplace, good luck, go talk to our sales team. It's, no, we're going to go into this base case, we're going to make X amount of money, but this is the baseline for what we're going to build on top.
Yeah, totally. And you're deeply embedded.
Yes, deeply embedded, correct.
Yeah, which kind of leads me into kind of a broader question, maybe stepping back a little bit, which is you're creating these co-branded experiences with these partners. Maybe share a little bit about the importance of that co-branded experience. And also, I guess, as you think about driving value for employers and for employees and for your partners, talk a little bit about Talk a little bit about that co-branded experience.
Yep. We spent a lot of time thinking about this question of how much should we co-brand. I think it was obvious after we had launched our first version that being inside their app made a lot of sense from removing friction perspective. But then once you're in their app, we've all seen it, right? If you've ever checked out and, used a firm, like you're actually living in a firm. Mm-hmm. If you're in Plaid and you're connecting your account, it's like you forget that you're in Plaid most cases. You're just like, wow, okay.
Very often you're not even in Plaid. Plaid is seamlessly doing the work behind the scenes.
Exactly. And they're just like an infrastructure. So there was like this kind of like menu of options. And in order to answer the question of like how embedded do we want to be, it came back to like, what are we trying to do at the end of the day? And what we're trying to do is provide value as fast as possible to consumers for them after the fact to say, oh my God, this was easy, this was fast, what is this solution? And so what we decided to do was not to go all the way to this is our user experience, because I think there's an element of trust that they get out of payroll, so we want to retain some of that. But we didn't want to go either all the way to like we completely disappear, because we want to create a little bit of a trusted brand. And so what we landed on was co-branding. So if you enter the user experience of Clair, you're going to see that it looks and feels from a design perspective exactly like your payroll system that you use or workforce management system that you use every day. But you're going to see as you go through our funnel that it's more and more Clair branded. And when you take an advance, we're very, very clear with you that this is an advance taken by Clair. And over time, we our brand creates comfort, creates trust for the consumers to, complete their financial transaction.
Yeah. And interestingly, on that same note, you've created this co-branded experience. You also have allowed for the opt-out option for employers, which is somewhat unique. First, explain what opt-out means, because I think the audience can better understand that. And then explain why make that choice.
Yes, it's a great question. And that's one that we spend a lot of time on with our partners. Let's go back in the context for payroll systems. Payroll systems typically build a payroll system. Not all of them have started as a payroll company, but let's assume that their payroll system is live. They then are pulled by their customers to do more. It's logical. I even say that. I reach out to our own payroll system and said, I would like you to do X and Y, Z more. And then they probably categorize all these things, and then they make a map and say, well, we're going to take the top 10 things that these people want to build. When they take that top 10 things, they're most probably going to go and partner to build it. When they partner, the logical thing that they do is they say, we're going to put you on a marketplace. We're going to have all of these options there. Okay, I talked about Citybike. You want a solution for your employees to have better commuting, in your city. Here's a Citybike membership they can sign up for. And then the employees sign up. What we ended up doing was saying, well, actually, you know what? We think that on-demand pay is so crucial to people's financial life. It is such a personal and tough situation for most employees that having an employer control flow where you have to go to your employer and say, look, I am short $50. Can you help me? Should not be part of the classic, marketplace benefits that then, employers will then pull of their employees and raise your hand, who's short on cash. It should be something that's actually embedded within payroll. That's there. Like that's the way Uber does it, right? Uber just lets everybody sign up, and they don't care who you are. Just sign up as much as you want. And I think that's the future. And so I think the vision for us to go opt-out, which also can be defined as default opt-in, meaning every single employer will be opted in, but at any point for the 90 days before, 60 days before, 30 days before, 2 weeks before, the employers can say, no, I don't want it. But in default, we're going to let it be there so that employees can sign up and can be in a better financial position.
And have you found that employers have come back to you and said, we'd like to opt out?
Very, very few. I think the last launch we did was 72,000 businesses, and we had 19 businesses opt out.
Oh, wow. Interesting. That's a crazy ratio.
Yes.
And I'm guessing people kind of, in order to even opt out, would be requiring you to basically say, I don't want to provide my employees this benefit.
Correct.
Yeah.
I think most employers know that their employees are short on cash. Most employers know that their employees come to them from time to time, as I just explained, saying, look, I need $50. But I'll tell you, them knowing it, also doesn't mean that the average employer, they have other things to do, right? It's not that they're bad people. It's just that they have other things to do. So they're not going to go on a marketplace, sign up, look what the benefits are, and put the onus on them to select a provider. But they're also not going to say no to the payroll system that says, we have this thing. It doesn't affect you. You don't need to do anything. It's self-sign up. It's self-control. We're controlling all the flows. That's actually the perfect solution for 99.99% of employers. And that's what we're seeing in our data.
Yeah, super interesting. Let's play out a scenario. I'm a payroll provider. You're talking to me. What's the pitch? What's the story you're telling me? And assume I've tried building this in-house.
Amazing. So Aditi payroll company. You tell me, hey, look, I've seen that you've done this with a few payroll companies.
Yep.
I've tried to launch my own on-demand pay system. It doesn't sound crazy, paying employees in real time. Doesn't sound super hard. So I tried it myself. But you're probably coming to me because you shut it down.
My credit losses were so high. The risk was so crazy. I don't think I can do it.
Exactly. And so that has happened to us quite a few times now. It continues to happen. The reason why you, Aditi payroll company, built this is because you saw the demand from your employer's employees requesting a feature like that.
Yep.
So you're coming because you're like, look, I've tried to build it. It didn't work out, whatever the reason is. I'm going to go and try and still offer the solution. Let's see if Clair is the right partner. The first things we're going to look at is, Aditi, do you have a user experience that employers and employees live? Do your employers and employees rate you on the app store somewhere similar as a good app that's easy to use? And if the answer is yes, then you pass the first test. Then the second test will be, look, Aditi, this is not a transactional relationship. Like, you need a product manager and a product team with engineers, capacity. They don't have to be fully dedicated, but engineering capacity that allows you to embed this feature. And if you tell me, yes, we do have that, they do, a mobile app, they do a workforce app, whatever that is, then I'll be like, okay, great. Then how can you prioritize this? Is this a plan for you to prioritize it? And if the answer to all of these questions is yes, then I'd say you're a great candidate to partner with us. And that is how the relationship would start.
That's awesome. And I oftentimes think about this question, kind of sitting on the other side of the table from you, is when you made the transition, you sort of gave us the case of what we needed to believe, why this was the right way to do this. And honestly, at the time, we can be transparent, is like there was skepticism, right? Like, how big is this opportunity? How many people are bought in? Turns out you actually proved that to us pretty quickly, that there is a massive opportunity here. There are a lot of payroll companies that have tried this, which actually was kind of crazy to hear. And then there's a lot of people who actually hadn't tried this but have been wanting to provide this for their employers to the employees. And so oftentimes I come back to the question of, as a founder, when you make such a big decision, right, you're kind of putting all your eggs in this basket. I just have this question, which is, how did you feel talking to your board? How did you feel talking to your team? How did you feel breaking the news to your co-founder?
Yes.
Tell us about the debates. Tell us about the conversations you were having.
Of course. And I'm really glad you're asking this question, because I think one of my favorite books in, I would say, the founder journey is a book called The Hard Thing About Hard Things. And you don't need to read anything else probably than the title to see where I'm going with this, which is, I think the success of a startup is proportional to how many hard conversations you're willing and wanting to have. And what I mean by hard conversations is it's very, very hard to get a group of people, to find the right people, to bring them together, and then to get them to work towards a goal together. And then once that's working, most probably you didn't get it right the first time. Every single founder story, like, some are faster than others based on how much architecture also you need to build to get there. And so we had proven a lot of good things. There was a lot of things at Clair that were working really well, but I didn't feel like we're building a category-defining company. The reality is that I owe it, honestly, to my co-founder, Alex, that we sat down, we had a lot of very difficult conversations, and we were not, always aligned, but very quickly what we realized was, okay, what does the consumer want? How big is this market?
Yeah.
Maybe there's doubts about our capacity to, like, really own this. And then I think once we had that and we were, aligned, then we we always made a decision to try to find the people on our board that we felt were the right people, and that was always what we optimized with. And I think like once we explained the rationale and said, these are obviously the risks, like it might be that the market is smaller than we think. It might be that the unit economics are not good as we hope for.
Yeah.
But the opportunity is real. And I think at some point we also had people on the team who didn't absolutely love the vision. And we had to sit down with them and said, well, maybe you want to go to school then, or maybe you want to, go back to a company that you were working on before. And that part is hard, but it's also the right thing.
Yeah.
And so being comfortable with, at the end of the day, if you're trying to do like solve a very complicated problem, societal problem that many people have not succeeded in doing, you're going to take risks. You can take calculated risk. And so we felt we were taking calculated risk.
Yeah.
And there was a little bit of an element of luck. There was a little bit an element of timing. But I have to give it that Alex was really the person that, really made it happen when maybe he didn't fully agree with me on certain things, but he was like, okay, yeah, like we'll jump in this together, and we're in this to make it work, and the opportunity is real. And now that the company is, to put it simply, is exploding in terms of results and like it's growing, it's really nice to look back and be like, look, this was a hard time, but it made us really strong.
Lots of late night dinners and arguments in French to eventually get to the place. It's the strength of a strong marriage between two co-founders, right?
100%.
Yeah. Well, I just want to kind of wrap things up and talk a little bit about the future.
Yes.
Because there's so much more that we can kind of go with here. And I think if we think about sort of the next frontier for earned wage access, how do you think Clair continues to lead in this space? How do you think Clair continues to be, the sort of savant that's doing things differently?
One thing that, again, I really believe in is that wage advances is the Band-Aid of financial services, which is you're short $50 to get gas and groceries for the next 2 days until your paycheck arrives. The reason sometimes you start with such a simple product is because 80% of Americans want that product out there. 60% of Americans cannot cover $400 bills. So it's a huge volume of people.
Yeah.
You get it out, you get the solution. But that for us is the it's the base of the pyramid. The things that come on top, and this is really our vision as a company, is that we can then expand into the next set of products that these employees want, and we can offer it to them in a way that a direct-to-consumer or non-employer connected provider will struggle to. I'll give you a good example. If there's a difference between somebody who has been unfortunately in a low-income situation for quite a while versus someone who maybe just graduated school and now is working paycheck to paycheck, but they're on the way to be in a better place. I think their set of financial solutions will look different. I think the person who is for a long time in a rougher batch, we're probably going to need to help them or try to create products to help them get a better credit score, because taking on-demand pay over and over again might be not the best solution for them. So how do we get them away from on-demand pay and into a credit builder solution to then upgrade to a credit card? And then suddenly they have this luxury that many of us have, which is, we're not scared that the card will decline because the card is a credit card. But for that, they need a good credit score. But if you have somebody who's just maybe started off their journey and they took a few on-demand pays, then the next thing is hey, actually, I'm going to need to get a car because, I made a little bit of money now and I'm trying to get to this job that's in town, so I need to get a car. Well, car loans in the United States are more expensive by default because the lender doesn't know if you're employed or not. They'll know after the fact. So if you can share with the lenders, right, that this person is employed literally today and tomorrow they have a scheduled shift, then the cost of capital for buying a car or leasing a car will be cheaper because of the data we can furnish.
Yeah.
And so I think what we're seeing, what we're entering, talking about this pyramid, is that on-demand pay will be the basis, but we're going to be able to offer more and more financial services. That's always been at the heart of Clair's vision. The thing is, when we started, we wanted all of that to be based on a paycheck. What we realized is that we can still still fulfill that vision, but we're going to need to potentially decouple it. And it makes sense, right? Not some people will want different products than others. Financial services is it's not a winner-take-all market. It's a very broad, very specific to your situation, geography, needs. And so we want to be able to continue on that vision of a massive financial services for America's workforce.
It brings me to my last question, which you sort of alluded to already, which is you started Clair with a mission. And if we look 10 years from now and we think back to the impact that Clair has had, what is the one thing you want to leave the audience with and the HR tech community with and employers with? What is the one thing or the biggest impact Clair would have had?
Absolutely. I think the biggest impact we can have is convince and make payroll and workforce management systems realize the opportunity that's in front of them to build the best and the most advanced financial products for America's workforce. Why? Because they have the data. Because no one else has that data at scale. And so we hope that we can, be part and their partner for all of this. We think, based on the optimism we have of the size of the market and all of that, there will be other people trying to eat the pie. But we think that being one of the first ones will allow us to own a good chunk of the market. And so the view for us is, once we succeed, we will see dozens of millions of people using Clair-powered financial services because payroll and workforce management systems decide, it's part of what we need to do in the future as everything is cloud-based, mobile-based with AI that allows us to give holistic solutions to, and I'm talking on behalf of payroll systems here, but for payroll systems to offer that to employers and their employees.
That's awesome. Well, you and I can keep chatting, and there's so many other stories that you can share, but I think this has been super educational for people to just understand the journey that you all took, sort of the value of what you're building. And I'd say the biggest thing here in the takeaway is that the opportunity is massive that lies ahead. And I think Clair is really poised to sort of go after this. So wish you guys all the best and excited to be on the journey with you.
Amazing. Thank you so much, Aditi. You've been a much better host than I think I have. So thank you so much.
Thank you for having me.